is, would it be the same going both ways? I'm not too certain if that's what's being got at, but I think important to emphasize that the equipment is what customs duty might apply to that movement if there are duties and there's no deal. But services, there's no customs duty. There are some changes in VAT on software apps. I can mention those later because there's some questions along those lines.
Excellent, thank you, Paul. Next question, as a construction company who doesn't export anything to the UK, but over the years have bought equipment from the UK, what changes will happen for us to import that equipment over to Ireland?
I'll take that if you will. These goods for sure will be subject to import duty and VAT regardless. And I would suggest that whoever asked this question, that they ensure they are EORI registered as soon as, because they will be paying duty and VAT on these goods.
Excellent, thank you, Jim. We do a small number of low value purchases from Great Britain, approximately 6 to 12 a year for less than €1,000 each. These are currently sent to us by courier. When I spoke to customs agents to discuss engaging their services, 2 different agencies suggested that the couriers may be able to look after this for us. Have you any guidance on this? I can see on Revenue's website that this seems sufficient for goods for personal use, but I'm not sure where we would stand as these goods would be for the business.
Yeah, happy to run with that one. I've actually got a bit of an insight into that one from the point of view of we've done some work with several of the courier companies. So the courier companies are set up to import and to do the declarations on such shipments. A lot of them will have got customs authorizations that are applicable to express parcel carriers only. And I would see a very seamless and very quick process in that. And I think probably the best thing is to let the courier company to go ahead and do that. And it'll be the quickest and most efficient way of doing it. But for ease of mind, I think maybe have a conversation with who the courier companies you're working on with today and see what information they've got available. But I think you'll find that they're very well placed to cover and to maintain the quick delivery of the product.
Excellent, thank you, Derek.
It's also important in relation to that one, just quickly, that the courier companies have been doing customs clearance for donkey's years. So this is going to be nothing new to a courier company at all. Like I said, they've been doing parcels around the world for donkey's years. So I also would like to throw in one point, bringing in a consignment with a value of €1,000 would never be classified as low value, that's for sure.
Excellent, thank you, Jim. The next question is, if exporting to Northern Ireland, will anything change if you have your EORI number? Jim, anything on that?
As far as we're concerned, there will be no controls on goods moving between north and south, or south and north, so it's not really relevant.
Okay, super, thank you. Can any customs tariff or duty be reclaimed? Derek, I think that's probably one for you.
Yeah, duty by its nature is a tax on import. That's when the tax is due, that's when it's levied. There are exceptional circumstances where you can reclaim duty if you re-export the goods, or if for whatever reason they're damaged, they're not usable, etc. But it is the exception rather than the norm. So unlike VAT, which you can reclaim as a business expense, duty is a tax payable on the import of the goods.
Okay, super, thanks, Derek. And last one on the importing, exporting customs is, we import cleaning chemicals. We understand we need to register with REACH, but what is involved after that?
I could have a go at that.
Thanks, Paul.
REACH is an EU-wide system for control of chemicals, and the position would be the case at the moment that you have to register. I suppose the question is really about what happens after 2020 with the UK. The UK is setting up its own system of REACH, but I'm pretty certain, I'd have to check, that if you go online, you'll see their guidance. I think they're giving a lead-in time. So if the question is saying, what do we have to do new in the United Kingdom? I'm pretty sure that recent guidance has been published. It's on uk.gov transition. if you put in reach, you'll find this. And I think they're giving up to the end of 2021, like to 2022, to get registered. So this is a big theme that the UK, because they're not bound by the EU anymore, are giving a lot of concessions and lead-ins. So if what I think they mean is, do we have to do something new in the UK? The answer is, it will be eventually yes, if they're subject to those controls in the EU. It's a common system for registering chemicals and moving them. UK falls outside it, but I'm pretty certain if you go on to equally that they have a health and safety executive site as well, but if you go onto their Brexit site, you will see they're giving concessions for registration, and you should certainly look at those. And I think you will have a good few more months.
Excellent. Okay, thank you, Paul.
Also speak with the
Sorry,
HSA for any information they might have. They'll give you some information as well, the HSA.
Very good, thank you. Now I see there are questions coming into the chat thick and fast, but I'm going to go through the ones that were sent to us prior to the event. So we'll carry on, and then we'll come to the questions in chat at the end. So we're moving on to the VAT side of things now. And the first question is, do I need to register for a VAT number in GB in order to trade B2C through e-commerce? If I don't, will retail customers be charged VAT on arrival at their homes and charged VAT on everything, including children's shoes and other zero-rated items? Is that one for you, Paul?
Yeah, I'm happy with that. Yeah, but the biggest changes in VAT, I suppose, are selling to consumers, non-businesses, because for the most part, the business-to-business treatment for VAT will look similar because of postponed accounting, which is terribly important. Normally, VAT is always payable at the point of import, but for VAT-registered businesses, both on the UK side and on the Irish side, there's a postponed VAT accounting, which effectively postpones it until the VAT return date. And then the net effect is that for businesses that can reclaim their VAT, there will ultimately be no VAT. So it'll look very, very like the present process where you can treat a purchase from another EU country as what's called an intra-EU acquisition, and you account for the VAT. So you set off the VAT. So the cash flow implication is there's no VAT. So for businesses, there's the minimum changes with VAT. Where it gets trickier is more selling to customers, because our consumers and non-registered businesses, because the norm is obviously they're not registered for VAT, so that they don't qualify for postponed accounting. So the general rule is that when you import into a country, the consumer will have to account for VAT. Now that'll be worked through, Derek mentioned DPD and the fast couriers, they'll arrange for the collection of that. But GB has introduced a special provision for consignments less than £135. And this is, I think, what this question is getting at. In that case, the supplier from outside Ireland will have to register in the UK and collect the UK VAT on those consignments less than £135 and account to the UK revenue. And the idea is that in small imports for consumers and non-VAT registered people, that's how the VAT will be accounted for. This is something that's coming anyway in the EU. I think the EU is introducing these rules in July. It's part of changes to VAT generally. If they mean e-commerce and digital sales, that's a different matter. I think what they probably mean is for goods ordered over the internet. Digital sales, there's another little complication there, and businesses would have to register in the UK if they're providing actual digital services, so downloads, nothing tangible. If they're for another particular reason, it's the treatment of sales of electronic products, of e-commerce, sorry, not e-commerce, but pure electronic services. You have to account for them in where the consumer is resident, and you would have to register in the UK in that situation. That's the case anyway now, but there's a thing called mini one-stop VAT, whereby you can pay the Irish revenue and they account to the UK revenue. But that will change. You'll have to register in that case as well in the UK for a different reason. So on average, if you're selling into the UK, there is the prospect that you might have to register there, either for those small consignments of goods, or if you're selling digital services, under the fact that the mini one-stop shop that you would have with revenue now no longer works.
Okay, very good. Thanks, Paul. Very concise. Will there, and this is related to the first question, is what will the VAT implications be importing from the UK? It's probably a continuation of what you were saying there, Paul.
Yeah, it's effectively, it depends who you are. like the absolute default rule is normally when goods move across from one customs territory to the other, and that means Great Britain. It doesn't mean Northern Ireland. So from Great Britain to Ireland or Ireland to Great Britain, the norm is that VAT is paid, and this would have been an enormous issue but for the reliefs I'm going to mention, this postponed accounting. So if you're a business buying in, it effectively won't change. Provided in reality that you can, you're entitled to reclaim VAT and all in the normal way. So for businesses buying business to business, the changes in VAT will be minimal because the postponed accounting. So it has to be accounted for in the import declaration, and it has to be notched up, and VAT will be paid on the cost and the cost to the border. But the actual cash flow for a business buying and somebody importing goods will be the same as at present effectively. But where it gets complicated is where it's a purchase to a consumer, and so a consumer buying in after the 1st of January, unless there's some kind of postponement or lead-in period, the VAT would have to be accounted for. That might be done through DPD or Amazon. There's big changes coming in VAT in about 6 months' time. They should have been in force now in July, and that's going to place more of an obligation on people like Amazon and these platforms to collect VAT. So it's a little bit of a mess where the 6 months now, if there's no implementation period, maybe there will be an implementation period. I don't know, it's getting very late in the day. So, you know, the broad answer is VAT's normally either payable or has to be accounted for. But with businesses, it shouldn't actually change in effect as long as the postponed accounting position works for them. But for consumers, it could be payable at the point of entry, and in 6 months' time we'll have these easements, like they have the reverse of what we mentioned in the UK a moment ago, whereby lower value imports under €150, which is the same as 135 pounds, will be accounted for by the seller, and also the platforms will be much more liable in July. So it's a complete mismatch.
Okay,
I know there's a lot in that, but it's there's a lot of twists because you got to look at the scenarios.
Yeah, okay. Thank you, Paul. Will there be a border post to deal with VAT on consignments from Northern Ireland?
I mean, that as we said before, the north-south position has really been bedded down very strongly in the last 10 days. The protocol back a year ago, the withdrawal agreement effectively makes Northern Ireland part of the EU for goods purposes, so VAT on goods and customs and export, all those requirements don't apply in north-south trade. Throughout the whole year, it looked as if that might be in jeopardy, because it looked as if the United Kingdom was going to implement the protocol in a way that would have been unsatisfactory to the European Union. And then people fear that because of that, the European Union would have put pressure on Ireland to protect the single market. But 10 days ago, quite unexpectedly, and hopefully this kind of foreshadows what's going to happen in the talks generally, the EU-UK agreed arrangements for Northern Ireland, which really seem to bed down that protocol. So that's making it seems to be as solid as it's ever been, that this protocol will be implemented, deal or no deal. It's a lot easier to implement if there's a deal, a hell of a lot easier. But so Northern Ireland, the position won't change, so there won't be border posts dealing with VAT as such. There's going to be no border checks or changes in the treatment for goods north and south. Not the case for services, but for goods where it's much more obvious and in your face with customs duties and that type of thing.
Okay, excellent. Thank you, Paul. Will we have to pay VAT at point of entry from the UK, including Northern Ireland? Will we have to pay cash up front as we do now with imports from the USA? Well,
that's the change I mentioned a moment ago. Sorry, I'll take this one too, because it's essentially a similar type of question. It had been the case that you paid VAT at the point of entry, but the government's introduced postponed accounting, as I understand it, for all importing. So as long as you're a VAT registered business, you'll have to account for VAT. It'll have to be mentioned in the customs declaration, but the cash side of it should remain the same. Sorry, someone else may want to get in there as well.
Anyone want to add to that, guys? So with VAT, a lot of the questions are very similar and related, so there is a bit of crossover if anyone wants to add something there.
Yeah, I think as Paul said, it'll have to be mentioned in your customs declaration at point of import, but the actual payment of the VAT will be included in your VAT return. There'll be a new box in your VAT return, and it'll be included in that. So it'll have to match up to what you have in your customs declarations.
Okay, great. Thank you, Jim.
And once they tie up, well, then there should be really no issue. It should be a cash in, cash out scenario in terms of, you know, VAT return.
Yeah. Okay. Super.
Just
Thank you.
changing the VAT return very slightly to tick different boxes to allow for this. I understand the VAT-free return, so it'll be very similar, but it'll just the box will be similar, provided you're a business, which I understand the question is.
Excellent. Thank you. Who is going to calculate the VAT to be applied to invoices for goods coming into Ireland? And will this VAT be recoverable? It's probably another one for you, Paul. You're going to be busy on this section.
Well, if VAT is on the full cost to the point of entry, which I understand is the case, so it would include, if there was customs duty, would also be on the customs duty and the transport costs. But as I mentioned, for businesses, because of postponed VAT accounting, which is really important, this has only come into force. In fact, it probably hasn't come into force yet. The legislation was only passed in this Brexit omnibus bill a couple of months ago, and it is a big change. Postponed accounting should mean that you don't have to even charge it. So effectively, it's recoverable in the sense that, like, if you buy domestically and you're a business, you can recover the VAT. But in fact, with postponed accounting, just like with buying from the UK now, you never pay for it in the first place. You have to account for it, but you're ticking two boxes on your tax return at the moment. You're saying it's an EU import, and you account, and then you also say, well, it's a purchase in my business, it's a credit, and they net off against each other, provided you're a VAT business and everything you do is vatable. If it's not vatable, you wouldn't have full recoverability. But equally, the exact same thing is going to happen, and it's worth making the point again, because it's a big change from even buying from outside the EU. But at the moment, it's not even a question of having to recover the VAT. You won't have to, just like at present, you won't have to pay it at present for a purchase from Great Britain, provided you're a VAT registered business.
Okay, probably this next question is very related to this as well. So if I occasionally import non-resale goods from the UK, how will I deal with VAT at point of entry?
So once again, it depends on who you are and what type of business it is. If you're a VAT registered business, you would qualify for postponed accounting. I mean, otherwise the principle is VAT would have to be paid at the moment the goods enter the country. That's the big change, really. The kind of EU facilitations are gone, but assuming it's a VAT registered business, the postponed accounting would net out the liability.
Okay, thanks, Paul. If we are registered for VAT in the UK and purchasing goods in the UK and selling them direct to our customers in Northern Ireland, what are the consequences of Brexit going through with or without a deal? Who'd like to take that one?
That's actually very tricky at the moment. The UK is a single VAT place. Like you buy and sell in the United Kingdom, and you're selling internally, and it's 20% VAT in the normal way, so it's not an import. The UK, the Northern Ireland's been treated slightly differently for goods, so that is very tricky. I think logically it would just be the same as at present, because it's an internal UK purchase or a UK business, and the goods aren't moving outside the UK. This all goes back to this Northern Ireland protocol. The goods are staying in the UK. Now, if they're being moved on and they're destined to move on, there may be customs duties if there's no deal. But if it's just a question of an internal UK VAT transaction, the norm would be UK VAT would be charged. But there are rules going to be made to reflect the Northern Ireland protocol, and I'm not certain how exactly that would work through. If you look at the the guidance on uk.gov, you'll see when they make these rules what difference that would make. I would expect politically very strongly a purchase would still be regarded as an internal UK purchase.
Excellent. Okay, thanks, Paul. And just the last two questions on VAT here, actually, and they came in from the same person. I did run them by Paul. So Paul, I'm afraid you're on the hot seat again. We manufacture bar and hotel furniture in County Monaghan. With Brexit approaching, am I right in assuming we do not have to charge VAT to Northern Ireland customers as before, and our competitors in Northern Ireland do not have to charge VAT to customers in Southern Ireland after the 31st of December?
Yeah, that's the intention of the protocol. It's very firmly bedded down now. What's happened in the last couple of days seems to make that very strong. So it won't change. So when you're selling from one jurisdiction to the other, like selling to Great Britain before 2021, it'll be zero rated, and the person who acquires the goods self-supply. So the effect is, and it can be very anomalous, that it's you have to pay the VAT and recover it when you buy it inside your country. But when you're bringing it from another EU state, and Northern Ireland will be treated as another EU state for VAT purposes, you self-account, with the result that you get this zero treatment. But I say with postponed accounting, which is being introduced as well in purchases from GB, you'll have that effect as well. So the irony is, you buy something from GB, if you just forget the customs duty, but for VAT, just as at present, if you're a business who can recover your VAT, you're actually better off buying from abroad, and just in that narrow sense. I mean, obviously you now have customs declarations and costs no matter what from GB, and that's going to be more complicated. But the broad answer there is yes, in that case, within Ireland and Northern Ireland.
Okay, super. Thanks, Paul. The last one: will we have to pay tariffs and VAT for goods coming in from the UK? If so, how will this be done? Obviously, our competitors will not have to pay the VAT and tariffs, so we will find it even more difficult to compete with them on price. So, Paul, I think that's you again, isn't it?
Yeah, I don't know, myself or Derek, I suppose. I'm not too certain what they mean.
Do you want me to read it again?
Yes.
Sure. We will have to pay tariffs and VAT for goods coming in from the UK. If so, how will this be done? Obviously, our competitors will not have to pay the VAT and tariffs, so we will find it even more difficult to compete with them on prices. I think they're saying that their competitors have part of the yeah, sorry, go on.
Yeah, maybe they mean in Northern Ireland. That could be possibly what they're getting at. I mean, it's as we've said, in terms of buying from Great Britain, you know, if there's an agreement, it's expected that most goods will be zero rated. So what you're talking about really is the cost of the processes. If there's an agreement, so there won't be customs duties, but there will be new processes, because every time you move something from Great Britain to Ireland, there'll have to be export declarations and processes on the Great Britain side, and import declaration processes on the Irish side. So that'll add to costs. But the expectation is, if there's an agreement, there'll be no tariffs on almost everything, possibly everything, but certainly very close to everything. Value-added taxes, I've mentioned, won't effectively change with this new postponed accounting coming in if you're a business. I suppose if what they're saying is relative to somebody in Northern Ireland, could there be an anomaly? And I suppose there might be, but because like from Northern Ireland, there will be customs processes, but they're being simplified. It depends on whether the goods are intended to stay in Northern Ireland or move on. The Great Britain, the UK government's given a significant support to Northern Ireland businesses to undertake these processes. There's a trader support scheme, which has been, or sorry, a trusted trader scheme, which has been announced in the last number of days in Northern Ireland, whereby Northern Ireland traders who are using the goods only in Northern Ireland will be able to self-certify this if their turnover is below a certain amount. So there may be the possibility of, if that's what the question is getting at, of anomalies between businesses in the north and south. When that beds down, and it, you know, that may change supply chains possibly if the costs are different. We'll have to see. It's really new and early days, but I would hope, you know, that there'll be an agreement and there'll be no tariffs, and the VAT shouldn't be substantially different. So really what you're talking about is the fact of this enormous change in the process, and you may have to get proof of origin. I should also mention, you know, the zero duty depends on the goods being of EU or UK origin or certain other countries, and a lot of goods are made outside the EU, so that may impact on that particular situation.
Okay, Paul, thank you. And we actually, there's a couple of questions under the title of legal, so I think you're back in the hot seat again, Paul. But this question is, if you register a business in Northern Ireland, can you carry out your sales that way?
Yeah, a lot of people have had this question in various ways over the last couple of years. For the most part, you shouldn't need to form a company in Northern Ireland to trade there. I mean, that'll be very exceptional. There are situations where you may need a license, very unusual situations if you're in financial services or haulage, or very unusual situations. You may need a company if you have to sponsor, if you need a sponsorship license to get visas for people who aren't UK nationals or Irish nationals. So if you've EU 26 nationals in your workforce, you might need a company. But most cases, you won't need to register a business in Northern Ireland to keep trading with it. I would be very reluctant to. You need to be very careful about registering a company because it's got consequences. You know, you have to pay. It has to pay its tax if you trade through it. You can register a company and do nothing with it, and you can let it be struck off, and it's a couple of €100. But if you're maintaining a company, you have to maintain a registered office, and that's you're probably going to pay accountants or someone else like maybe €1,000 a year to maintain it, and then do accounts. So it's got consequences. So I wouldn't rush into forming a company in Northern Ireland. Some people take the view maybe you might have more rights if it's a Northern Ireland company. That might be the case. There might be situations where if say you have contracts with the National Health Service or BBC or someone like that in Northern Ireland, it might be desirable to have a company, and that's worth looking at. But generally, I'd look carefully before forming a company, because for the most part, you should be able to continue doing business, especially with Northern Ireland. Where it might change is things like procurement and tenders and financial services, because Northern Ireland's outside the EU. Sorry, it's outside the EU for that. The Northern Ireland Protocol applies to goods. So there are quirky situations like in tenders where you might be slightly better off having a Northern Ireland company, but you need to think about it because it means you're going to have to do tax returns and company returns. So it's very particular, but I wouldn't just automatically assume you have to have a Northern Ireland company, especially trading goods. There should be no changes whatsoever.
Very good, thanks. Thanks, Paul. From a GDPR perspective, the dreaded GDPR, should we be concerned where our data is stored from a personal and a business point of view?
There's GDPRs. I don't know how to call the question. If you want me to answer it, I'm happy to.
Yeah, well, it is under the title legal, Paul. Which,
yeah, okay, absolutely.
That's
okay,
your badge.
The GDPR situation it's one of these things that's it's in hock in the negotiations at the moment. Like with GDPR, you need consent to deal with personal data. It's all about people's personal data, anything that can identify a person directly or indirectly. And so you need quite strong consents to do anything. But the European Union has this EU-wide system called the General Data Protection Regulation. And one of the controls it has is if you're moving data outside of the European Union, there needs to be extra consents again. And there's a couple of ways around this. One of them is that the EU would recognize the country's data protection rules as adequate. And if it recognizes it as adequate, then you don't need these extra protections. So in the course of negotiations during the year, the EU is supposed to be examining the UK's data protection, their privacy rules, and seeing if they're adequate. And it's supposed to be nothing got to do with the negotiations. Now, you might think they have the GDPR already. They have the exact same rules in the UK, so why wouldn't they recognize it? But the EU is saying, well, no, they have different rules on surveillance and criminal surveillance and police access to information. So they're saying, well, it's not self-evident that it's the same, and it's worth recognizing. So there could be a little bit of play acting, because I suspect if there's an agreement, the EU will recognize the data situation as adequate. Now, there may not be. There's been developments during summer whereby this guy Schrems took a case and invalidated for the second time the rules whereby the United States rules are recognized, and the court said, well, the EU has to be really careful in assessing other countries' data protection. But if the EU recognizes the UK's rules as, and this is the UK including Northern Ireland, as equivalent, you won't need extra protections. But if they don't, there's a couple of different ways of doing these extra protections, and one of them is you have to put a contract between the business where the data leaves the European Union going into the United Kingdom, between the recipient and the sender, and that these clauses that you can put in a contract are on the Data Protection Commission's website. So if you're being very cautious, you could do this. The UK, logically, it applies both ways. So the UK is saying we're not accepting the EU rules as necessarily, compliant, but the UK is saying we won't require these controls. So it's only EU to UK. And if the EU doesn't recognise the UK rules as adequate before the end of the year, then strictly speaking, you have to put in these extra controls when a business sends it to another. Any business sends it out of the EU. I know that's messy. Look at the data protection website. I hope it won't happen. But like large scale businesses have done this and they have put these contracts in place. But that's the alternative if the European Union doesn't recognise UK's rules as adequate. I suspect they will, but look, I don't know. There's politics, I suppose, and everything.
Can anybody else add to that? I think it's always a tricky one. GDPR is still fairly new to us all, but it's an added headache to all businesses. If not, we'll move on to just the general questions are coming up next.
I just think in relation to GDPR for domestic activities in relation to importing and exporting goods, I think all Irish companies will have to store the data and handle it in accordance with the GDPR regulations as laid down here. I think most companies have a GDPR policy. Certainly we do, and all of our customers' information will be treated accordingly for obvious reasons.
Very good, thanks, Jim. Okay, we're moving on to sort of general questions that we received over the last couple of weeks. So the first question is, how is the government addressing the potential fallout from the deal, brackets or no deal, i.e. increased unemployment, reduced cash flow, increased cash burden, as everything is likely to take longer? Who'd like to take that one?
Yeah, I think in fairness, it's a question for government rather than for ourselves, and that's where the decisions will be made. I know it's something that has been planned for. There's a lot of contingency plans in place, but the politics of what's happening at the moment, Adam, kind of dictates that until there's a trade deal, we won't really be aware what those contingencies are, because to release those contingencies in advance may be actually accepting a certain outcome. So I know certainly from my conversations with revenue that they're very, very cautious in the information that they're putting out there. But there is a heck of a lot of contingency planning has gone into place. But this is going to potential of a no trade deal is going to have a massive implications for not just Irish, but UK as well, and for other European countries. So I don't think it's something that sits lightly on the mind of the negotiators at the moment, but we just have to wait and see what that outcome is. I think we'll see all those plans coming into place after that.
Very good. Thanks, Derek.
I would also add as well that exactly as Derek just said, I mean, to deal with the Brexit team within revenue, they're going to be the people that give you the advice and guidance and where you're going to go in relation to all of this in terms of cash flows and all that kind of stuff and ability to pay. So I think you really must engage with the Brexit team and revenue. We've had one customer who has done so and has got some level of clarity. It's not exactly what they wanted to get, but they have got some level of clarity in relation to where they're going to be going in the future.
Very good. Thanks, Jim. Paul, were you about to say something there as well?
I wasn't, but I would just say that like the UK has announced all kinds of concessions. And I'd say if it goes one way or the other, I'd say if it's suddenly definitively no deal, as Derek said, I think a lot of concessions and fixes will come out of the woodwork quickly. I wouldn't rely on them and be complacent even at this stage. I think you still have to assume this is likely to hit on the 1st of January. But I think there will be all kinds of concessions and lead-ins and things to take the worst of it away.
Adam, just one thing that has come in more or less while the thing has been on is RT's Tony Connolly reporting from Brussels has said that the European Parliament has now put its foot down and said unless it has a written text of the agreement by Sunday evening, this will not be considered by the Parliament this year. So what they are saying basically is that unless Barnier and the UK government have a text to bring into the Parliament, we will be into a temporary no deal, as it were, on the 1st or 2nd of January, so that even if they do come to a deal afterwards, from a commercial and from a transit and trading point of view, you're going to be dealing in a no deal scenario for a number of days or a number of weeks in the new year, irrespective of if they come to an agreement later.
Okay, very good. Thank you, Neil. Is there any likely impact on Onpost or Royal Mail services? Anyone shed some light on that one?
So again, wouldn't anticipate any impact on it. And as Jim mentioned earlier on, like the courier companies, they're dealing with goods coming and mail coming from third countries anyway. The scale will obviously be much higher, but they've already got their processes and procedures in place. So I wouldn't anticipate any major changes. It will come back to, I think, the VAT element that that Paul spoke about earlier on. But the actual process for the Onpost and Royal Mail, I wouldn't see any major change.
No, just BAU, I'd imagine. Thanks, Derek.
One other thing to add on that one. Revenue will also have their presence beefed up and ramped up with the post office facilities here in Ireland. So anybody who's thinking of, I suppose, using the mail as a method of getting around any of this will, I suppose, they might get away with it in the short term, but ultimately they will be caught up and they will be obviously subjected to retrospective audit by revenue. But I do know that they have, or they will be ramping up their manpower in the post offices as well. So it's just something to be mindful of.
Yeah, very true. Thanks, Jim. So the next question, we are a printing company and we purchase our printing plates directly from a UK company for our own use. What impact will Brexit have on our continued business purchasing plates or consumables from the UK? Do we need to change how we transact?
I wouldn't have thought that, to be honest with you, because I would regard it as pretty much every import from the UK, regardless as to how it's shipped, mail, courier, air, road, whatever, it doesn't really matter. It would be subject to customs clearance and all taxes that would be applicable. So I don't see any way around it.
Very good. Thanks, Jim. This person's interested in what will happen with passporting for financial services, especially e-money products. Now, we touched on that earlier, didn't we? But who'd like to take that one? Is that one for you, Paul?
I think so, yeah. It's a little bit like the data protection. With financial services, there's certain, the EU, like the UK is leaving the EU-wide system. There's an awful lot of sectors like in investment funds and banking where you can have a single license that works all around Europe. It doesn't apply to all types of financial services. The UK is leaving that, so most of the financial services firms have been way out doing this and are very well prepared. So some of them will have to have a presence in the European Union if they're UK, and even vice versa if they're Irish selling into the UK. There's some areas of financial services where the European Union laws allow the European Union Commission to recognise other systems, other countries' regulation as equivalent, and then that allows it's nowhere near as good as being in the European Union selling financial services, but it allows sale of some services. I'm not certain offhand if e-money is one of those, but likewise with the data protection, this isn't part of the negotiations. The European Union is assessing whether the UK's rules are equivalent. This is part of the negotiations that are ongoing. You'd have thought they would, but just like the data protection assessment, I'm pretty sure they haven't yet. So there are situations where you might find that these people have to reorganize how they do business. Like most SMEs, smaller businesses wouldn't be in this sector because it's usually the large financial services sector. Where I've come across it more, it's where a key client actually has to reorganize. So yeah, the passporting is gone. This right to have a single European license and provide pass services all around the European Union, that's gone for UK-based businesses. So a lot of them have opened a base and which will answer their problems is somewhere in the EU, and that's where quite a few have come into Ireland to use it as its EU base. It's a big question. Central bank websites got an awful lot on it. I'm pretty sure that this equivalence hasn't been recognised by the European Union. I suspect if there's an agreement late in the day, they'll recognise it, but it won't solve everything. It'll allow some little areas where EU will recognise the UK rules as equivalent, so it just won't totally disrupt financial services. But nearly everyone in the financial services, they're so big, they've worked all this out a long time ago.
Yeah, okay. Great.
Adam, I would say one thing I would just chuck in there, and I don't know exactly where the customers or the member is coming from with the question. But one thing that the Banking and Payments Federation have flagged is the issue of SEPA payments to or from UK payees. If the full amount of, there's an issue about addresses. It is unclear at the moment. What I would say is that anyone who's concerned should be watching, especially if they're collecting by SEPA, just to make sure in January and February that all those payments arrive, and to immediately question the payee if there's an absence of that, because there has been some question. I'm talking about insurance products, pensions, and things like that, just to keep an eye on your SEPA inbound and your SEPA outbound if there's any UK connection there.
Very good, thanks, Neil. So just a couple more questions here. We are a marketing services company based in Waterford, team of 9 staff, in business since 2005. Invoicing our UK customers is in euros. How will a no-deal Brexit impact our ability to deliver our services into our UK B2B customers, most of whom are UK-based? The parent company is in the UK. We also assist a few B2B companies in Ireland with their UK B2B marketing campaigns. Goodness me, sorry, that's quite a long-winded one. Did anyone get the gist of that, or do you want me to read it again?
I'll have a go.
Yes, please, Paul. Thank you.
I suppose that, well, okay, there's a couple of different aspects. Obviously, with currency, nobody can predict what might happen if that's one aspect is they're invoicing in euro. Like currencies, if you knew how to predict currencies, you know, you could make an infinite amount of money. But when something unexpected happens, you know, if a worse Brexit than expected happens, I suppose sterling might fall. People think that's the case, or if it's slightly better than expected, it might rise. So I think that's part of the question in the sense that it might affect transactions around the exit date. A big point is in relation to services. Most services aren't regulated. Like, even though the UK is falling outside the European Union, it doesn't regulate most services. We don't. Like a handful, like financial services, transport, haulage, some are communications, most of them are kind of larger scale things. So for the most part, at the moment, you have this right to provide services into the UK, and you could go to court if you were stopped, if they suddenly put passed laws or the official bodies made it more difficult and said you had to have a local office. Those guarantees will be gone, but I doubt that there will be too many new barriers. The UK hasn't tended to do it in the past. We don't know how the future will go. So for the most part, unless you're in a regulated business, I would hope that as a service business providing into the UK, you could continue to do it. Important point, actually, just to go back once more with VAT, and when you're providing services cross-border, that doesn't change at all. The way that's effectively usually done by the recipient when you're providing services effectively to a business in the other country. That just doesn't change equally. So if you're providing services to a business in the United Kingdom and you're an Irish VAT registered business, they will self-account and they'll continue to self-account. So the VAT treatment won't change. So for most purposes, and I've done a couple of jobs in this type of area, when I've actually looked at it, you shouldn't have to form a new company. You just won't have the same guarantees you had before. It'll probably be the same. There can be quirky reasons why you might have to form a UK company. Like, I've come across people who have, say, a lot of employees from continental Europe, and then they're sending people into the United Kingdom. Common travel area, if you're an Irish citizen, UK citizen, you have full free movement. The common travel area solves a lot of problems with services. But if you're, say, having an employee who isn't already in the UK and they're entering it for the first time, there may be visa problems. That the UK is given a little bit of a lead-in time with that. And then it's little things like that can be obstacles. And then if you had to get a UK visa, you might need a company to have a sponsorship license over there. But for the most part, I mean, it could be the culture and the general atmosphere, but for the most part, legally and, in formal terms, most businesses providing services aren't regulated. And so it shouldn't change, even though it could. You just won't have the same guarantees. But for most business providers, I've come across lots of business, been amazed, who have a full office in Ireland, providing all their customers, or most are in Great Britain, and that's where they get their revenue. They don't have to necessarily enter Great Britain that much. It's more of a hassle if if people are non-UK, non-Irish. For the most part, the businesses won't change unless there's some quirky reason, or unless the UK start, acting differently to what they acted in the past and putting up barriers they never did before.
Highly possible.
Yeah.
Okay, that's the last of the questions that we had forwarded in advance of this event. I've noticed that the chat has actually been quite lively, so I think we'll be going back to, I'm taking them chronologically again, so we're probably going back to the VAT side of for the customs import export. So I'm going to just go through them, and again, just in the same manner, we'll put it out to the panel there to see who's best to answer. What restrictions or regulations will be in place regarding the importation of chemicals, both hazardous and non-hazardous, from the UK? Jim, is that one for you?
Yeah, I think we should go back to the question we had earlier on in relation to the company importing cleaning chemicals. I think they're going to have to obviously register with REACH, and they should really be talking to the HSA in relation to this. There's an email address, chemicals@hsa.ie, and they get all the information that they require in relation to that. Hazardous, from a logistics point of view, obviously there's multiple declarations you must adhere to in relation to all of that. But customs clearing it will be pretty much the same as for hazardous and non-hazardous. The processes will be identical. It's just how it will be handled and how the product will be treated afterwards. That's basically all. Nothing more to it. Pretty straightforward, in fact.
Okay, well, that's good to hear, Jim. Thank you. The next question is, we haven't been asked for our EORI number yet by our UK suppliers. I assume they will need this from the get-go.
Probably more important that they have the EORI registered for any import or export declarations that they were doing from Ireland, and not critical for the import into the UK. However, it's a piece of information that we would advise all businesses to collect from their clients. But I think it may be a reflection on the state of preparation in the UK compared to Ireland. A lot of UK businesses just haven't really engaged in the whole process just yet. So I would expect maybe over the coming days they may get a couple of panicked phone calls looking for information.
Okay, thanks, Derek. Yeah.
There are also multiple checklists available for anybody who's importing or exporting to or from the UK, and they can be shared. I mean, I've got dozens of them here from different people that can be shared. And if you tick the boxes on those, well, then you have a good steer as to where you're going to go in relation to both import and export.
Yeah, very good, Jim. Thank you. And a question here: as an importer, are we responsible for the net and gross weights which are being supplied by our suppliers? But we have noticed they are incorrect.
Again, that's a conversation to take up with the suppliers to make sure that the information is accurate. Any customs declaration is going to be prepared on the basis of the paperwork and of the assumption that it's accurate. So the importer of record or the importer into Ireland is responsible for the declaration they're making to revenue. So yeah, they definitely need to take that up with their suppliers and have accurate information.
Yeah, okay, very good. Thanks, Derek. Yeah. Is there anywhere, there's probably one for you actually, Derek, so stay live. Is there anywhere to look up commodity codes for goods other than what's on commercial invoices given?
Yeah, the definitive resource for EU tariff codes is Tariff, T-A-R-I-C. If you Google that, it's a look up. It's not the most user-friendly website insofar as it's a little bit difficult to navigate around, but that is the definitive. There are a couple of more user-friendly, but I would call them guides rather than definitive. Intertrade Ireland have a very good look-up for commodity codes. Be careful if you Google commodity codes because they're not always the same globally. So an EU tariff code may be different from a US tariff code. So just a little bit of caution there to be on the safe side with that. But Tariff is the definitive. Check Intertrade Ireland as well. That's a good resource to track it down. But again, as we spoke about the weights as well, the importer is the person responsible for making sure that the correct tariff codes are.
Excellent, thank you, Derek. There's someone who's unmuted themselves. There's a bit of background noise. I can't find them to mute them. So if you're unmuted and you're not talking, could you please just mute yourselves? Thank you. Sorry, this it was in line with a question above. I should have said with my question above that our UK suppliers have agreed to supply DDP. Does that make sense to someone there?
I guess on the DDP term, that the importer doesn't really need to worry about it. They're going to expect the goods to turn up, delivered, duty paid at their premises as they do today. And it's that, however, they will still be the importer of record, and it's important if a third party are making declarations on their behalf that they know that that information is accurate. So don't just assume because it's DDP that if a declaration is being made in their name, they have still some due diligence to do on those declarations.
Yeah, okay, thanks, Derek. That was actually in line with the EORI question and their suppliers. Just going through, sorry, there's some questions that aren't questions, if that makes sense. No customs implications. Okay, okay, if we are sending a box of a welcome pack for a virtual conference from Ireland to the UK, it's a free gift for those attending, value maybe €50, and it's things like t-shirts and the like. Will that require paperwork per box? Will recipients suddenly be tax duty liable?
Effectively, if it's if it has a value and everything has a value, then a declaration is required. There are different processes that you can apply for to derogate VAT and duty if it's goods that are used for display or used for trade samples, etc. But it's really one for HMRC to make up their mind on and to decide exactly. But I think work on the assumption that there would be a liability and then look for a manner in which that liability may be able to be discharged.
Excellent, thanks, Derek. Yeah. That's a good question.
Well,
sorry, Jim.
I would, if I was sending a number of these boxes to participants of this virtual conference in the UK, I wouldn't be sending them all as an individual consignment. I would send them all as one bulk or consolidated consignment and clear them as one entry into the UK. If they're all sent as separate boxes, they could all incur separate individual customs clearance charge in the UK rather than one. So I would send it to one company in the UK and ask them to arrange domestic distribution for me.
Excellent, thank you, Jim. As a manufacturing company, we sometimes temporarily get back some product for modification or repair. Do we need to pay duty on the products back in and back out again?
So again, there are customs processes to cover goods coming in for repair and returning or return goods. No is the short answer, but there may be customs authorizations that you need to apply for. If you're doing it as an ongoing basis on repairing items that are coming in, you may want to look at inward processing and then sending the goods back out again, which would be a customs authorization. Or if they're goods that you're manufacturing and they're coming back in for repair under warranty, again, there's a process and duty and VAT wouldn't be liable on that. But again, it's important to make sure that the declaration is made correctly and it reflects that.
Okay, thanks, Derek. Yeah. And what certifications, etc., will be needed for the importation from the UK of bees for pollination and for horticultural biological controls, predatory insects which control other insects which damage crops? Can someone handle that one? That's quite detailed, that one.
Yeah, we come back to the importation of live animals, and it would be treated quite similarly to the trade of cattle or horses or pigs, etc. So it would need to be dealt with through traces, number one. Department of Agriculture would be your first go-to place to get more information on that, but there will most definitely be very strict restrictions on that and veterinary certification, etc. So it is very specialized, but definitely Department of Agriculture is the place to go on that to get clarification.
Okay, thank you, Derek. Is the postponed VAT accounting applicable here for imports from the UK? I thought VAT was payable at point of import here. I know VAT accounting will be available for imports in the UK for a short while. Is that one for you, Paul?
Yeah, the answer is yes. I mean, the way the legislation's been made, there could be conditions in the long run. Like before, to get a deferment on VAT, you actually had to have a guarantee if you're importing, say, from America. But because of Brexit coming up, the government's passed legislation. I think some of the implementing rules may still have to be made, allowing for postponed accounting apparently indefinitely. I know in the UK they've said the same in reverse, and they said it's temporary, so maybe over time they might put guarantees. But on both sides, Great Britain to Ireland and Ireland to Great Britain, you have this situation of postponed accounting. So if you're a VAT registered business, the treat that it'll be ticking a different box in your VAT return, but it won't, from a cash flow point of view, change either way. VAT by itself, as long as you're, your business to business. But yeah, as people have mentioned, VAT does arise at the point of import, but with postponed accounting, it just has to be accounted for. So it will be mentioned in the customs declaration somewhere, whoever's doing that for you. So it's notched up and it's referenced, but effectively the changes and the intention, and this is totally new, is that it would lead to a situation just much as you have at present, where you don't effectively pay the VAT if you're a business importing from another business.
Okay, thanks, Paul. Again, quite a technical question. Will British standards on contract upholstery fabric, and Derek, I know you know a lot of the numbers for the goods and what have you, but this, I'm not sure if this means anything to you. BS 5852 crib 5 still be applicable in Southern Ireland after the UK has left the EU?
Yeah, I'd like to say I intimately know BS 5852 crib 5, but unfortunately don't. But in relation to standards from between the UK and the EU, effectively British standards will no longer be acceptable within the EU. So it's important to make sure that your suppliers have got the dual standard. So it's the EU application that would apply from here on in. But again, standards is one which is very, very kind of niche, and it's worth getting further advice on that. And I guess the Department of Trade and Enterprise would be a good direction to go on that. But it's essentially you need your EU certification coming in. So talk to your suppliers as to what they put in place to do that.
Excellent, thanks, Derek. This actually sort of a continuation to that is, will the UK still accept international standards such as ISO 9001?
See the standards and oh, sorry.
Yeah, go on, Paul.
No, there's some types of there's about 32 directives. Certain areas are subject to legal standards, like machinery and construction products and electronic equipment. Most standards are effectively, they're not legal, they're commercial and they're a sign of trust. So it depends on whether it's a standard in an area that's subject to particular regulation. As say, there are areas like construction products, machinery, medicines, where there are EU-wide standards. And what's happening is, if you're coming in from the United Kingdom with those types of standards, the manufacturer who's doing it can't rely on a UK certification body anymore. So they should have made arrangements to have an EU body. So the manufacturer should generally be able to, if they're in any way interested in their business, have taken steps to ensure that they're still compliant under the EU rules. So like the ISO standards are not the law, they can be the basis of the EU standards in the areas where the EU standards are actual legal requirements, and literally it's unlawful to sell in breach of it. But that's only, I've heard people say like it's half of products. I don't know how you measure it. It's about 30 different sectors. So an awful lot of ISO standards they're voluntary, so they'll be just accepted, as a commercial matter. It's only in those areas we have to have, like CE marking is the usual thing, it's the most normal thing. When you see the CE marking, that usually implies there's an EU-wide rule that says, and they could be based on international standards. I would expect if there's an agreement over time, there'll be some elements of recognition of what's called certification bodies, so that it'll be less of an issue. But if there's no deal, or if there's any kind of delay in the deal's implementation, it'd be a question of going back to a manufacturer in those sectors: construction products, machinery, electronic products, medicines, and making sure the manufacturer can say to you, look, these are certified to work on the EU market. And then on the UK side, they're actually giving a bit of a lead-in period, so they're going to recognise EU standards. I think for a year they've published their guidance on that.
Adam, if I can chip in there.
Yeah, please do, Neil.
That is an area that we know a lot. I have to be straight up here. A lot of our members have been missing, particularly in areas like construction, intermediate parts for car manufacture, stuff like that. There are areas around fire safety, intermediate chemicals for drugs and things like this, where these are absolutely essential. So particularly if you are buying a product that is certified at the moment from the UK, you must check to see that there are British standards that are acceptable, and typically, but you don't take my word on this, they will have a BSEN. But it is exceptionally important that you talk to someone knowledgeable before you take in products that are intermediate or are, as Paul says, there are standards that are legal requirements. There are other standards that are not. They're just showing that you're doing great things. We will very soon, because we know in the first case, you should be asking your UK supplier. So the issue is a bigger one if you're importing, because there's a cost to this. The first port of call is your manufacturer, your supplier in the UK, and you get them to certify that they are supplying subject to European standards, okay? And that should work, because they should want to do that. But if you're going to fall into a hole on this one, Maeve will soon be putting up, we hope to have an affiliate product on standards, localized standards here called Eco-Merit, and that will be available to members and non-members in the new year.
I just mentioned the HSA, the Health and Safety Authority, have a lot of very good webinars and presentation on standards on their site.
Excellent, thank you guys, thanks all there. There were two questions from someone here. One we've actually covered already, so I'll read the first one. When an English company is using our software, is there any change to the VAT? We may have covered that, but I'll ask that again.
Yeah, prospectively, if you're providing digital, you have to look if you're within the definition of digital services. If at the moment you're using the mini one-stop shop, if it's business to business, it should remain the same. So that's the position I mentioned. Generally, providing services to a business in the United Kingdom, they self-account for VAT, so you don't charge VAT in Ireland. The recipient self-accounts this thing where they pay it and they can offset it. It's more an issue if you're providing it to private persons and consumers, whereby you might have to register in the United Kingdom. Excellent, thanks, Paul. I've just realised also we're running out of time, guys. The Zoom will end in about 8 or 9 minutes. So I'm going to come rattling through some of the questions we have in the chat here. So we are an outsourced B2B marketing service provider based in Ireland, servicing UK business markets for a range of UK business clients. As part of our UK campaigns, we securely transfer business data to our client servers, which are based in the UK. A number of our UK clients have raised concerns over a company located in the EU processing and transferring data to UK servers in the event of a no-deal Brexit. Would the panel have any insights into that? That's the issue I mentioned earlier on. Strictly speaking, private data coming from out of the European Union, so that includes going into the United Kingdom, including Northern Ireland, after the end of the year, unless this adequacy decision is made by the European Commission. So unless, as part of the negotiations, I suppose, the European Union deem the EU rules to be equivalent, you have to put extra protections in place when you transmit the data out of the European Union, which would mean from Ireland to either Northern Ireland or Great Britain. There's a couple of ways of doing it. Look on the data protection website. There's a contract you can put in place between the business sending and the business receiving. That is one of the ways of protecting it. I would hope that, I wouldn't bank on it, but I would hope that the European Union would recognise UK's rules as equivalent. So that's what they're talking about. It should, apply both ways, but the UK has said it's okay to move from the UK to the EU because the EU rules are sufficient. So it's a very particular thing that's involved. There can be other issues where you're marketing and so on into the European Union, into the UK about GDPR representatives, but that you'd want to be doing it at kind of a higher level to be caught by that.
Okay, thanks, Paul. Are there any specific issues related to printer materials, books, magazines, newspapers?
Yeah, from the importation point of view, they're no different to any other commodities. No, VAT on some articles, printed material is applicable, on others it's not. So understanding whether the VAT is applicable there or not. And at the moment, there is 0% duty on paper products. So we wouldn't expect a trade deal or not that there would be any duties.
Very good, Derek. And also another question on bringing stuff in is actually, we purchase seeds from the UK. How will duty work? Do we pay in advance or pay on delivery?
So again, the expectation is that the duty will become liable at the point of import, and that's when the duty will need to be paid.
Excellent. Okay. Thank you, Derek. Some of our UK suppliers have registered for an Irish VAT number and will now charge Irish VAT on their invoices from the 1st of January. What's the reason for this move?
They must be actually trying to maybe sell duty paid in Ireland. They must be doing the importing and selling from a local entity, or maybe it would just depend. But the implication would be you'd be paying Irish VAT if that's the case. I know a lot of Derek would know more about this. A lot of the big supermarkets and so on both sides have been telling their suppliers, their smaller suppliers, to supply duty paid, and that can be very challenging. And part of that, some people have set up companies in the other jurisdiction, like UK companies in Ireland, and so they're importing to themselves from their one company in Great Britain to their company in Ireland, and then selling locally. That may be what's happening in that particular case.
Excellent. Yeah. Okay, good. And in fact, the others aren't questions. They're thank yous coming in from people who have had to hop off the event. So if we haven't answered all your questions, we can respond after this. We will be sending a recording to you. Apologies, we missed the first 10 minutes, but they were mainly introductions anyway. If you do have any further questions, please feel free to get in touch with us. We will, as I mentioned at the start of this event, that we will be doing an awful lot more in Q1 around Brexit, because there will be things that we haven't considered, decisions that have been made at government level that we need to address for you. So we will be promoting more of these in Q1 and potentially into Q2 next year as well. But listen, it's a sort of a wait and see sort of exercise, but I hope you found today very useful. I'd like to say a big thank you to our panel. Thank you for joining us. Thank you for your wisdom and your valuable insights. And to the audience who've joined us today, thank you very much. I hope you got lots from it. If there's more that you need from us, do drop us a line. I know Maeve has put the panel's details in the chat room there, so do have a look at that if you need to engage with them for their services as well. Neil, I don't know if you want to say a couple of words, or are you happy to wrap things up?
Very happy to wrap these up, Adam. I would thank you everyone for listening. We appreciate, we know that we have been getting a lot of worried questions into the membership team and the HR team. So we'll probably run another one of these again. But what I will say to everyone is the 2nd of January is not going to be like the 31st of December. You cannot assume that things are going to remain the same. Things are going to be different. And it is really important to understand that even in the event of a deal, this is really important, there are going to be costs of administration, and I've already had members complaining to them because they've been notified of this by their customs and shipping intermediates. There are going to be costs that you will incur in operating with UK businesses from the 1st of January. That's not going to go away or be changed by any deal. The only thing that a deal will do is a free trade agreement will eliminate, hopefully, the possibility of a tariff, but it's not going to do away with the administrative and other things you've heard on this, like standards, rules of origin, conformity, all that sort of stuff. So business on the 2nd of January is going to look different. If you haven't done something by now, do it. If you haven't availed of a Brexit Start to Plan voucher, avail of them now. You can get the professional support of people like Paul and Derek. They are consultants on that system, and you can get them paid for by Enterprise Ireland or Intertrade Ireland. So if you have not availed of those Start to Plan vouchers, do so now. And lastly, a very happy Christmas, a prosperous new year to all of you, and let's hope we get the best case rather than the worst case scenario in the first week of January.
Excellent. Thank you, Neil. Thanks, everybody. Thanks to the panel once again. And as Neil said, happy Christmas. He's looking to a better 2021 than 2020. Appreciate it, guys. Thanks very much. Bye-bye.